exporting high-quality Chinese industrial parts, improving global equipment value, and helping the world recognize Chinese manufacturing. This is the UKO Market Research Department. Today's Hardmetal Industrial Parts Briefing starts now. Today's key message is simple. Tungsten is no longer just a raw material price story. It is becoming a test of who can turn expensive material into fewer shutdowns, lower risk, and stronger customer trust. First, let us look at the upstream market. On August 21, 2026, long-term purchase prices from major tungsten companies were basically in line with the current market reality. Tungsten concentrate remained firm, with 65% tungsten concentrate moving toward around 420,000 yuan per ton. Miners are still reluctant to sell at lower prices, which keeps the upstream market strong. UKO's view is, when the mine side holds firm, downstream companies cannot rely only on bargaining. The real question is whether every gram of tungsten can create more stable production value for the customer. For industrial parts used in cold rolling steel rebar lines, customers are not only buying carbide rollers, dies, or wear part. They are buying fewer stoppages, more predictable replacement cycles, and less uncertainty in production. Second, let us look at the midstream market. According to China Tungsten Online, apt prices stayed around the 600,000 yuan per ton level, while tungsten carbide powder was quoted around 880 yuan per kilogram. Apt is the key intermediate material before tungsten powder. Tungsten carbide powder is the core material for hard metal parts. However, powder producers are under obvious pressure. Many companies have strong self-produced apt coverage, insufficient orders, and weak economics for external apt purchasing. To control costs and match real order demand, they prefer to shorten the purchasing chain and reduce outside apt buying. UKO's view is, this is one of the key reasons why the tungsten market is splitting. The upstream side is firm, while the middle and downstream sides are under pressure. For UKO, this means that price communication with customers must become more professional. Instead of simply saying, material is more expensive, we need to explain the full chain: raw material cost, powder stability, production consistency, service life, delivery risk, and the value of preventing downtime. Third, let us look at trade structure. According to customs data compiled by China Tungsten Online, in July 2026, China's tungsten product imports, excluding carbide tools and halogen lamps, reached 4,012.82 tons, up 69.53% year-on-year and up 20.5% month-on-month. Import value reached 974 million yuan, up 224.35% year-on-year, though down 3.04% month-on-month. Exports reached 1,222.63 tons, down 27.77% year-on-year, but up 2.07% month-on-month. Export value reached 1.774 billion yuan, up 224.19% year-on-year, and up 1.28% month-on-month. UKO's view is, China's tungsten trade is changing structurally. Raw material dependence on imports is rising, with more tungsten ore and concentrate coming from Kazakhstan. At the same time, exports of upstream tungsten raw materials are being more tightly controlled, especially toward the United States and Japan. This means the old export model is becoming harder. Companies cannot only rely on low prices and flexible trading. They need traceability, compliance awareness, technical explanation, and long-term customer service. Fourth, let us look at product trends. Exports of tungsten hexafluoride, ferrotungsten, and metallic tungsten materials increased significantly. This shows China's competitive strength in smelting and processing. However, imports and exports of carbide cutting tools both declined month-on-month, reflecting a weaker seasonal demand atmosphere. UKO's view is, the market is not simply weak or strong, it is becoming selective. High-value processing, technical service, traceable parts, and stable supply are gaining importance, while ordinary price-based competition is becoming more difficult. For UKO's customers in cold rolling steel rebar lines and related industrial applications, the most important thing is not whether one part is slightly cheaper. The real value is whether the production line can run longer, replace parts more predictably, and avoid emergency shutdowns. UKO's recommendation is clear. Do not communicate carbide parts only as products. Communicate them as production stability solutions. Do not only, quote, tungsten price changes. Explain how material quality, process consistency, and service records affect the customer's real operating cost. Do not wait until customers face a shortage. Build stock reminders, replacement cycle tracking, and risk warnings in advance. Do not compete only on price. Compete on reliability, traceability, and the customer's sense of safety. UKO believes the most important signal is this: China's tungsten imports are increasing sharply, while export volume is falling, but export value is rising strongly. This suggests that China's tungsten industry is moving from resource trading toward higher value processing, stricter rules, and stronger industrial service capability. For the next stage, the winners will not be the companies that only say, "We are cheaper." The winners will be the companies that can say, "This batch is traceable, this part has a clear application scenario, this replacement cycle is predictable, and this service can help reduce your production risk." This is UKO's mission: exporting high-quality Chinese industrial parts, improving global equipment value, and helping the world recognize Chinese manufacturing.